Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Checking in on the broader market, so it's going to be a very important Wednesday FOMC meeting, Thursday, major tech sector earnings. And those two short-term fundamental events are going to dictate a lot as far as short-term price action goes. So normally FOMC, I say, yeah, paying attention, but it's not really make or break recently. But this is a very interesting setup. We got the daily lower highs on a lot of names that we were looking for. SPY low of yesterday held right into the close, but it looks like a daily lower high may be set here. And if we drop down and break 319.25, we confirm a daily downtrend. When's the last time we've seen a clear lower high and lower low confirmed? It's been a long time on this entire bounce since that has happened. I'd say really the most clear one was back here in May. Ended up being a weekly bull flag, but it's notable. And why it's also notable for me is because oil is doing the same thing, and we're seeing a bunch of major tech sector names doing the same thing. So just watching for the potential. Let's just say we do confirm it and break 319.25. What do we do then? We zoom out and we look at the last weekly higher low of 296.74. And the bulls will say, well, as long as we hit that support level and hold it, we're still in an uptrend and we're still in full control. And that is the case. So if 319 breaks, we then have 6% to work with before we drop to the low. Roughly. So it's entirely possible we break that daily support, pull back a few percentage points, and keep the weekly uptrend. What is notable to me as well is that this higher high has not seen a whole bunch of follow through. So that tells me bulls getting a little bit exhausted, and it'll be very telling how much volume we see on any pullback. If we see bears do confirm with a bear break of 319, they need to see volume spikes in line with back here, when we were seeing 130 million shares traded a day. If you give me a red day, 130 million shares traded and a break of 319, that will say to me, whoa, bears are back. Let's see what weekly consolidation looks like. IWM. So IWM set a little daily higher low, tried to get some follow through, not much there. And we're looking at 145.39, 145.15 as two short-term support levels, keeping in mind that IWM is just looking for a weekly lower high on this move, just like XLF, which we will look at in just a second, which makes sense because XLF matters a lot more to IWM than it does to SPY. So high, weekly higher low, so far unable to break resistance, and if we lose those daily supports, our weekly lower high will be set, and we'll then be looking to see can the bulls form a weekly higher low compared to 133.28 and stay in the tightening range. QQQ, daily lower high set on the bounce, as we knew was the most likely scenario. We don't know what day it's going to happen, but we know bigger picture. That's what we're scouting. Low of yesterday held by 5-6 pennies into the close. And again, can the bears break 251.32? In the instance of QQQ, right now is a potential weekly bull flag. If we do not break 251.32, the weekly bull flag remains absolutely alive. If that level breaks and the daily downtrend follows through, we're then still looking for a weekly higher low. And really the last clear, we don't really have a very clear pivot point. We've got a couple little higher lows here. I guess we'll call 237.35 our last higher low. I like the higher lows to be very clearly defined with a couple weeks of pullback, but QQQ just hasn't seen enough weakness where its higher lows are just so brief. I much prefer very clear pivots when setting higher lows. So, bottom line is, if that support level breaks, odds of a weekly bull flag will decrease significantly, and we'll then be looking at the next level, 237.35. Healthcare sector, watching for a daily lower high. Bears have to break 104.43 to prove it. We have prove it levels on every single chart that we just looked at for what bears are going to have to break on volume to prove short-term control. And for XLV, it's 104.43. If that level breaks, we zoom out and we look for a weekly higher low to form compared to 95.42. Lots of space for the bulls to work with, 10% still. Financial sector, Still in a daily uptrend, but again, we're puttering around here after rejecting from the 2440s a lot. Daily support, 2375, still holding. But bigger picture, what's the most likely scenario? A weekly lower high compared to 2683. What is the indication that our weekly lower high has been set? Loss of the daily uptrend. What's our daily high or low? 2375. Have to lose 2375 support for our weekly lower high to be set, and we then look for a weekly high or low compared to 2252. Biotech sector, daily lower high set on the bounce. Pretty much a double top with the high of yesterday. Bears need to break 110.99 and 109.79 and 108.43 if we're really going to get follow through. Weekly time frame, tons of space. I would call anything above 97.15 a weekly high or low. So we just looked at all those names. We've got clear daily line in the sand levels that have to break for bears to confirm daily downtrends. But every name we looked at has a good amount of space to maintain weekly uptrends. Again, in less bear volume. Volume in general is the proven indicator. And with bear volume, it is a must with the broader market in this current market environment. Any bear breaks without significant bear volume, I laugh in the face of those bear breaks. But it's a great place to hedge your long-term portfolios. Again, I just went over this on the live stream with ChartGuys members, but if I'm hedging a long-term portfolio on this bounce, let's just say I hedge it at 321. My risk of getting stopped out is $7.50, we'll say. And my reward, even if it's just weekly consolidation to maintain the uptrend, if we drop down to 300, it's still a weekly high or low. But that reward is 3 to 1. 3 reward to 1 risk if we were to drop to 300. If we drop to 307, it's 2 reward for 1 risk. So again, hedging long-term portfolios, not a bad idea. Just keep that risk small and stop out if the bulls keep control. The VIX is still in this little channel, and we're tightening up. The bulls have to hold 2360 and break 2860 to change the daily trend and set a weekly double bottom. Weekly is a double bottom right now. Now we need to change the daily trend to have confidence that that weekly double bottom can hold. All about 2860. The dollar trying to bounce 4-hour exponential resistance, which has been rejecting the price for a week, is still rejecting the price, but we did establish a higher low. Bulls need to break 94 overnight, 94.01, to confirm a 4-hour trend change, which would mean zoom out and look for a daily lower high because the daily oversold bounce will be underway at that point. Right now, we're watching the pattern of a lower high every single day for the last 8 days. That has to break for any kind of daily bounce to be underway. Look at the dollar monthly long-term chart. How many trading days do we have left in the month? 3. Resistance. Support. I was going to say, that looked different when I drew it last night. Wrong anchor point. Support. You can see we're breaking bearish. Look at how many touches we've got. Plenty of touches. And again, you can always... the reason I don't like trend lines is look at where I can significantly shift whatever I want this chart to look like. Oh, we're about to hold support. We're going to play off this support line. Look for a bounce. Or if I want to tighten it up, oh, we're breaking out. We're breaking bearish. It's about to fall apart. Just based on a tiny little shift of this line, I can dictate the narrative, which completely opens up trend lines to subjective analysis. Price levels are not subjective. When you break a price level, there is no question about it. It's a concrete, set in history event. So I am watching this long-term setup, but it doesn't really matter to me. The 6-month time frame matters to me. And we're looking for a higher low compared to 88.25 to try and stay in this 6-month tightening range. And on any bounce, again, just looking for a daily lower high. Gold and silver, a bit of a climax move yesterday, last night, into this morning, but a nice recovery. What did we say? as long as the 4-hour 12-period exponential support holds, we're not going to see any daily consolidation. On this current bounce, I am looking for a 4-hour lower high and 4-hour equilibrium compared to 1981, but there's no sign of that lower high being set just yet. We would have to see gold weakness overnight to set the 4-hour lower high. We would then look to pull back and set a higher low compared to 1907, and we would probably have to wait until the FOMC for a reaction. Silver's the same thing, but weaker. There's your climax candle, 4-hour, higher low. And again, just look at the proximity to resistance. So to see a higher high, silver needs 7%. Gold needs just over 1%. And for those of you that have been following along, there was a video or a couple of videos over the past couple of weeks where I started noticing the correlation between the dollar and XAUUSD. And again, it was something I had never observed before, so I say, all right, I'm now interested in that and paying attention because the dollar broke bearish 2 weeks ago and XAUUSD broke bearish 3 weeks ago. So this chart gave a heads up, and look at the bounce now on the 4-hour time frame. Big bounce on the 4-hour, trying to change the 4-hour trend just like the dollar. I'm seeing a correlation between DXY and XAUUSD, which tells me that if that continues, a dollar bounce will see gold gain strength against silver. Keeping in mind that does not mean gold's going to go up faster than silver. What that could mean is silver is going to drop faster than gold. So if this dollar bounce keeps going and we see daily consolidation begin on miners, I would expect silver to pull back more significantly and see the XAUUSD chart bounce with the dollar. Miners look just fine. Potential daily bull flag. How that 4-hour tightening range breaks on these metals is obviously going to be very important short term, but the daily uptrend is easily intact at this point, and there's no red flags on that daily uptrend right now. Oil, just like SPY, daily lower high potentially being set, and if we see a bear break of 40.48 in reaction to the inventory report tomorrow, we will confirm a daily downtrend. When was the last daily lower high and lower low confirmed? You could call this one back here. So again, not a ton of follow through, but I've been saying for weeks at this point, I am just not comfortable bullish oil in this range as long as this rising wedge remains a possibility. And again, I could make this so we're still within it. I could tighten it up and say, oh, we're breaking bearish based on what my narrative is. But it's a rising wedge where bull breaks are not getting much follow through. We know we're looking for a monthly lower high, bigger picture on this oil bounce. So I'm cautious. I'm not bullish oil. If I had to choose a position, I would be bearish with a tight stop. Natural gas. Daily higher low set with a bull flag. Bull break of 1801. We must break 184 tomorrow for convincing follow through. So we're changing the daily trend bullish, and we have to break 184 to change the weekly trend bullish. And from there, we look up to 205 as the most important resistance level. New most important support, 1707. So that's where we stand in the broader market. We've seen it's still a risk-on market. We saw cryptocurrency, as I highlighted in the last video, breaking out in a big way. And now the MJ sector breaking out in a big way. Some higher risk reward sectors. Today I was trading a little bit of Kodak with its 300% gap up open, playing the bounce for the hourly higher low. Small loss in Tesla. Two small wins in KODK. Guess we can do that trade review. So bigger picture, 300% gap up open. I have no interest in a bullish position whatsoever. Consolidate for 3 hours and pull back 30+%. Okay, I'm interested. I'm interested in the first 5-minute oversold conditions after a massive bull move, and we never got there, but I was watching for it. We got close because I know we're looking for an hourly higher low. So the winner trade that I took was this one. So a bounce off the low of consolidation, a big enough bounce on the 5-minute time frame for me to say, okay, solid bounce. I'm looking for a 5-minute higher low, and I want to put my stop under the low of the day. If I'm scaling into weakness, my risk is unlimited. There's no support. I don't want to scale into weakness. I want to have a trade plan established where my risk is very clearly defined. So on this pullback, we broke $8. I said, all right, that's enough for me. We're close enough. I'll risk 30 cents for the potential reward of hitting the hourly higher low. So I entered at 798, I think. 796, 798. Stop goes under 762. So that's a little bit more than 30-cent risk. Let's say I was risking 40 cents. We then got the bull break to a higher high. I scaled out 2/3 of my position on that bull break. And then I held the 1/3 of my position for the 15-minute trend change, and I sold it just under $9. So again, a solid little win. So we'll see what the oil inventory report and the FOMC do tomorrow. Have a good rest of your day. Do good things. So now we're going to highlight the abundance of growth in this temperate rainforest here in Western North Carolina. I haven't watered the garden in 3 or 4 weeks. It pretty much is just a thunderstorm every day. Quick and easy. And this princess plant, I moved in 13 months ago, and in the first month I had a buddy come here and help me weeding stuff. And there was a plant that was literally a foot big, probably about as big as this thing is right now. And he said, you want me to pull this up? I said, nah, leave it. And I know everybody, foundation, roots, not a good idea, cut it down. I'm going to cut it down. I appreciate the warnings, but it's an experiment. And this princess tree is just massive in 1 year's time. That's what that plant can do. That's got to be 20 feet tall. Do you like your spot? Goo-goo. Example number 2 is this jewel weed, which I've showed before. This root system was definitely already here, but at the start of this year, there was nothing there, 0 growth. So just the root system underneath the mulch, and this bush is now over 7 feet tall and more than 5 feet wide. Look at how many fruit this tree, this bush, whatever you want to call it, is going to produce in 1 year of growth.